Really good afternoon, ladies and gentlemen. This is Alex from MarketWise Asia. So before we kickstart the session, just want to make sure that every one of you can hear me loud and clear. So if you can hear me loud and clear, please type the letter A in the chat box so that I know that everything is all well and good. All right, so before we kickstart the session by Jay, just want to make some announcement. Just want to thank you, our sponsors, Pepperstones, SG Securities, also known as SocGen, and Tokenized Exchange to make this event possible. And also want to thank our media partners also. And before we get also started, just want to let you know that you should be able to see the next slide. Yes, okay, do like our Facebook page and our Telegram channel and subscribe to our Telegram channel. So it's very easy, just search for MarketWise Asia to get the latest market update, price mover, and interesting market news. All right, so and we have the next event in March over here. It is by Rainer. So Rainer is the #1 most followed trader in Singapore. All right, you should be able to see the link on the page over here. Later, I will share the screen also. All right, so if you sign up by this weekend, right, you'll get to attend, right, by Colin Sell, how to look for insider buying by Colin Sell conducted. It's about 2 hours webinar. It is worth about $697. All right. So if you just register yourself for Rainer seminar that is be held in March, right, you get to access this webinar by Colin Sell. We will send you the details when everything is firm. All right. And yeah, for the best experience, right, you should watch this on your laptop. The best browser to use is on Chrome. And make sure you have a stable Wi-Fi connection. And if you have connection issue, right, on the streaming or the audio, right, please do not panic. Just click on the reconnect button at the top of your screen. So if you have clicked a few times already and still doesn't really work, just close your browser and log in again and click on the link and go in again. It should work fine. So because this is 100% web-based, it can be quite intensive. So I apologize if you're experiencing any issues previously. All right, so just bear a bit for a while, and there will be replay, and the replay will be sent to you via email later in the evening also. All right, so the next session is by Jay. Okay, so let me just do a quick introduction over here. All right, so Jay, with a keen interest in trading and investing, right? Jay followed his passion and embarked his trading journey in 2009 and reading dozens of trading books and attending numerous trading programs. Jay actually found consistency and has been trading independently for the last 10 years. He has been trading the market actively since 2011 and is well versed in equities, options, and index trading. And having traded each of these markets extensively, he built his trading philosophy on the concept of consistency. And in 2016, Jay obtained the Advanced Certificate in Training and Assessment by the WDA Singapore and is now an ACTA certified trainer. He actively used adult training principles and methodologies to facilitate his training sessions and making it a fun and immersive experience for his training. And today, he'll be sharing with you how to pick stocks with explosive potential using his TS2 Framework. All right, so let's welcome Jay now.
Hello, hi guys, hi everyone. Happy New Year. Hi Alex.
Hello, hi.
All right, thank you for the wonderful introduction. Hey
Welcome.
guys, if you can hear me loud and clear, right? Can you just comment like a yes, something in the chat so that I know, okay? Okay, Alex, how is it going?
Yeah, good. So yeah, once again, if you're experiencing any connection issue, I apologize for that. Just click on the reconnect button at the top of the screen. And if can't really work, right, just exit the browser and click back to the link again. That should work. Okay, thank you for that. All right, I see the response coming in already.
Okay.
Fantastic.
So guys, I'll be looking to my right and to my left from time to time is because I'm looking at where the chat is. So any point in time, right, if you have questions regarding what I'm sharing, just type it in the chat. And in the event I missed it, Alex, because later we will have a Q&A session. So Alex will help me follow up some of the questions as well.
Yes.
Okay, so let me go ahead and do my screen share. And okay. Okay, great. Can you guys see my screen? Yes? Awesome. So it's great to see all of you. Thank you once again to MarketWise Asia for organizing this Market Insights Virtual Summit. And it's been a pleasure to be back here once again, and a very happy new year to all of you. What a rainy start to the year, right? Especially here in Singapore. Every single day is raining. So today, right, I will want to share with you, right, how can you find the potential explosive stocks using the TS2 framework? And you may be thinking, right, what is this TS2? What does it represent? Actually, it's very simple. I don't like to, I'm a simple person. I don't like to complicate stuff. So the TS2 actually represents trade strong stocks. So my philosophy is to look for the strong stocks and then apply the methodology and trade the strong stocks. Okay. So guys, if you agree, right, or you think that this methodology is, there is some potential, you think that this is good, can you just help me type TS2? Okay. Just help me type TS2 in the chat. Okay. So this is representing trade strong stocks. Now, I know some of you are not hearing me for the first time because I've made multiple, presentations at this summit itself. And for those of you that are hearing me for the first time, right, this is me. By the way, my name is Jay. If you still don't know my name, maybe you're in the wrong room lah. Okay, so this is my in my office, and why I'm looking from left to right is because you're looking at a picture of my trading screen of my workstation. So I have a 6-screen setup. So I trade independently for the last, I would say 10 years, but the first few years was really, really a struggle. And today, right, I focus primarily on US stocks and as well as day trading indices and yeah, some other stuff lah. But my bread and butter is still US stocks and then the day trade of indices. So if you're not hearing me for the first time, maybe you have caught me at one of the other physical events that were possible in 2019 and before. Things like Invest Fair, Traders Fair, Share Investor Investment Outlook, etc. Okay, and I would love to connect with all of you. So just head on over to Facebook, right? Just look for my name, like JAYTUN. You'll be able to find me on my Facebook. If you cannot recognize me, right, just find the guy with the tall hair, lah. Okay, so this one's signature hairstyle. Okay, and in conjunction, right, with MarketWise Asia, and to usher in this new 2021, I will be also sharing with you a special offer that I have for all of the participants. As now I can see we have about 400 plus people over here. Okay, so if once again, right, if you are facing any technical issues, right, just click reconnect. If not, you just exit the browser and re-enter using the same link again. Okay, so let's formally enter the topic of today, shall we? So you may also want to, get yourself comfortable because for the next 45 minutes to an hour, I will be doing the talking. You will be doing the writing, taking down of the some of the notes, the key pointers. All right, are you guys ready? If you're ready, can you just type a yes in the chat to let me know? All right. So what is the first, or rather, what is the main challenge of any retail trader? Well, like if I were to use my own story or my own initial challenges when I started, right? I think one of the most challenging thing is how do I approach a market that is foreign? Because here I am in Singapore and I want to trade the US market, right? Because I keep hearing things about the US market, great things about how it moves, how Singapore market is like a, like a retirement old folks home. It doesn't move, but wow, the stocks on the US, there's some growth potential. It moves a lot. So I want a piece of that action. And that was why I was attracted to the US market in the first place. But the challenge, right, also comes when, in Singapore, we have only about 800 plus stocks that are listed, on the Singapore Stock Exchange. And then in the US, right, all in all, if you exclude all those that are traded over the counter, so-called the OTC stocks, we have about 6,800 plus stocks. And how do I know what stocks should I be trading? And how do I even know how to find these stocks? Because, these are the companies, right, that is foreign to us. Besides the big names, maybe we will know of like McDonald's, Visa, MasterCard, Apple, Microsoft, so on and so forth. We would know of these counters, okay? We will know of these companies. But beyond these companies, how do I find the rest? How do I find the rest of the company? So this is a huge challenge that was in my way when I first started this journey about 10 years ago. And the first few years of my trading journey, I was really, really just don't know what I'm doing. It's like my head is chasing my tail and then I'm going around in circles. So I wasted a lot of time trying to find where's the right way, which is the right direction for me to venture into. Guys, do you feel me? I mean, if you are in the same stage, right? What I can share with you is don't give up, because eventually you will find the right direction. Okay, and hopefully after today's seminar, I will be able to help you, at least point you towards the right place, okay? At least point you in the right direction so that you don't go all around, all right? And this is the main challenge, and that time, right, how did I get to, or what kind of stocks I was choosing, right, was also based on recommendations from friends, from news, from TV, and just like today, what is the hottest few things that people are talking about today, besides the fact that Donald Trump supporter invaded Capitol Hill? So besides that fact, what is the hottest thing? Do you all know of that? Can you just type it in the chat? Let me know. What are you guys looking at? Because chances are, right, the stocks that you have been hearing, the asset classes that you have been looking at, usually don't deviate much from Bitcoin, Ethereum, maybe Tesla, right? These few lah. And Tesla is like the defy gravity flying to Mars, right? As of yesterday, it really just fly. And this propels Elon Musk to be the richest man in or on Earth. All right, crazy, right? Yeah, new energy, exactly. Electric vehicle, Mr. Teo. NIO, right? NIO. I have a small position in NIO as well. So you see, most of us are looking at almost the same thing, right? Why? Because everyone else is looking at it. Make sense? Because your friend is talking about it. People who are not trading are talking about it. And it is all over news. And it is starting, okay, to appear on mainstream media, such as Straits Times, China News Asia, talking about crypto and things like that. And this is also one of the challenges. Not saying that whether it's good or bad, but this is also one of the challenges initially. Because for me, right, when I first started, I'm like a blank slate, like a blank piece of paper. Then I have to, I don't know what to look for. So whatever people say, wow, okay. Then I look at those. So all this asset classes, right, or stocks is what I term right now. I term them as very sentiment driven. And sentiment, right, they are easily inflated and easily deflated. And this is the reason why when it runs a lot, like that gravity defying. But when it drops, it really drops quite a fair bit as well. So do you have experience with this? Yes. If you have experience with what I've just said, right, can you just type a yes in the chat? So this is, the main challenge of, I believe, a lot of retail traders, yourself, myself. And this is why, right, over time, over the years, I find myself, getting into a more structured approach and finalizing everything, right? Here today, I want to share with you this approach, which is called the TS2 Framework. Now, guys, again, small test. What is TS2? What is TSS? What does it represent? Okay, can you just type it in the chat for me? So I make use of this framework, right, which consists of 5 steps. And the first part, okay, let me just give you a walkthrough first. The very first part, right, before knowing where to put our money, our hard-earned money on, we first need to know what kind of stocks that are we going to look at, correct? So step number 1, right, we are actually we want to find the basket or the list of stocks that are strong. So this is where step number 1, we find what? We find all the stars. We find all the strong stocks. So this is very, very crucial. Because I read this book by Mike Balfour. I think he is the founder or co-founder of SMB Capital, a proprietary trading firm on Wall Street. So he has this book called One Good Trade. And one of the concepts, right, that I got out from that book was he mentioned this: your results are just as good as the stocks that you are trading on, which makes a lot of sense, right? Just like, guys, just envision this. If you are driving, right? If you drive, let's say a bread and butter car, let's say a Toyota, versus you drive a Ferrari, which one has a potential to go further? Which one? Both of them maybe can go up to the same speed, and then one with a lot of effort, the Ferrari probably with relatively ease, and then Ferrari is able to go further, correct? So it is this concept that struck me, and I got this from Mike Balfour, and he said your results are as good as the stocks that you are trading on. And that really gave me a paradigm shift in my trading philosophy, because previously I was just looking all over the place. Friends tell me what to trade. I look at news, I look at TV, I look at social media, trading groups. So I got the trading ideas from there. And probably some of you are at this stage right now. You are still looking for all these ideas all over the place. But among all of this, right, there has to be some qualification so that we are able to find where is really the star stock, where is really the strong stocks, because the star stocks or the strong stocks have money flow, okay, have money flow in or out of them. So of course, if money flows in, generally the asset class or the security is able to go up in price. But if money flows out, then of course, the price, the asset class prices may come down a little bit. So we are always looking for implied money flow. So this is where, right, we find the strong stocks. And then what we do after we find them, right, it's really to put them through a filter. Like, oh, I have the best coffee bean over here and it's all grinded down to powder. But can I just eat the powder like that? I can't, right? I still have to make it into a cup of coffee. And how do I do that? I have to, put through a filter so that the filter will be able to filter out all the, the remains of the coffee powder, the bigger pieces, right? So we have to put them through a filter to qualify, because not all strong stock are in the correct market phase, because there are so many different market phases, some more volatile, some more trendy. Like Tesla, if you are looking at it, definitely is just trending in one direction. But however, right, if you look at, let's say, PayPal right now, PayPal was very strong in the first half of last year. Then throughout the second half, right, it was a little sluggish. And right now, heading into 2021, PayPal is what I call going into a sideways, still trending, but larger range kind of movement, like a type 2 market, according to my definition. So we have to qualify so that we know, right, I only have this amount of money. Now I got so many stocks, I cannot be putting every one. So what do? I filter out a lot. All those are like, okay lah, the secondary ones I put one side first. I take all those that are really strongest of the strongest, the cream of the crop. Okay, guys, following? Yes. If you're following, can you just type a yes for me so that I know, okay, we are still on point on this. Okay, great. Now, after we qualify, right? After we qualify, of course, after this, right, we will go into the step by step in detail. I'm not just gonna leave you hanging over here, okay? But let me just give you an overview here first. Step 3, right, it is to choose a fundamentally reasonable company. That means fundamentals, I'm not an investor. A lot of my decisions, right, I'm like 30% fundamental, and then price action, which is technical, I'm about 70%. So more often than not, I am more of a technical trader than a fundamental investor. I don't really look into, like the ratio analysis, whether is it undervalued, based on discounted cash flow or discounted earnings model. I know them, but I don't really do them actively, because most of my positions, right, are within a few days or a few weeks. So, but then that doesn't mean this is a lousy company and I'm going to, take my money and throw into a lousy company. I'm not going to do that, because money is hard earned, guys. Agree? Yes. So I'm not going to throw my hard earned money anywhere. I'm just going to make a more informed decision. So fundamentally, I'm going to choose a reasonably good company, a decent company, and all those that are not so good, right? Maybe I put one side, unless I see the price is like, whoa, the price action is so strong, then I will still be looking at it. Like, for example, I know a lot of you are looking at Tesla, right? So there are two camps to Tesla traders. One camp is it is going to go to the Mars and beyond, maybe even Jupiter, right? That's one camp. The other camp will say, will be the Tesla bears. There will be those people who will say, there's no reason why Tesla is so high, because fundamentally it is not producing as many cars as, you know, the traditional Toyota, Ford, General Motors is not producing as much cars as that. But why the company is flying? Why? It doesn't make sense. So these people, right, they are the Tesla bears, I call it. And they say, okay, the fundamentals is dislodged. It doesn't fit with this price. Well, you can agree or you can disagree. But the fact is, if you look at my next step, number 4, which is the price action, and using Tesla as an example, Tesla's price action is phenomenal. It's crazy, right? It's as strong as Bitcoin right now, isn't it? It is just going one direction. It's non-stop, one direction. So if price action disagree with the fundamentals, I always look towards price action, because the price action tells me that people are literally, okay, let's say prices are increasing. It tells me literally people are optimistic about buying Tesla at this price, knowing that it will go higher. Now, let me just come back a little bit. Think about this. If let's say today you want to buy into a company, let's say you want to buy Zoom, for example. If you want to buy Zoom, why do you want to buy Zoom? Why? Is it because you really love Zoom? You use it every day? Yeah, maybe you do at your work. But even so, right, you should hate it, right? If you use it every day in your work. Zoom meeting again, wapiang, you know? But if you want to buy this company, right, it is because moving forward, you are optimistic. You know that today, if you buy at this price, moving forward, it may be tomorrow, maybe 1 week later, maybe 1 month later, you are able to sell it at a higher price. You are buying because of this optimism. So if the price is increasingly, you know, continuously increasing, it tells you a very strong message. It tells you that the market participants have a very, very optimistic view about the future performance of this company. Case in point, look at Tesla. So will they be right? Are they right or are they wrong? Well, we are not in this market to be a judge. We are not here to say, hey, you are right, you are wrong. Based on this, I study, you are wrong. And no, this is what, you know, the real world, probably in our working environment, in our school, is all about right and wrong, right? But in trading and investment, right, there's no right and wrong. You guys agree? Because sometimes, right, things don't make sense, but yet you still make money, provided you're on the right side, correct or not? So for me, right, I always look at price action, and the price action, right, I'm always waiting. I don't force the price. I don't say, okay, I chase it. If it doesn't come to the reasonable price level, so-called the turning points that I'm looking at, then I'm not going to get in, because, okay, if I were to chase the price, right, yes, there is a chance that I may miss the further upside potential, but there is also an equivalent chance that I will miss a sudden pullback. And in the sudden pullback, it is going to be very nasty, very painful. And I've experienced a fair bit of those in my last 10 years of trading. So personally, I don't chase prices. If I miss it, I'm like, okay, although a bit regret, a bit pain, you know, like, miss already. Damn it, you know, you'll be cursing and swearing, but never mind, look for the next one, because it's already you already missed the boat. What else can you do? You ask the boat to come back, it's not going to come back, right? So guys, okay, agree? Yes. So if you agree, right, with patience, okay, with waiting, can you just type a wait in the chat, okay, to wait for the correct pricing? Because price is everything. Whatever you are buying today, whatever you are selling tomorrow, it is all about the price. And that determines whether you are going to buy or you are going to sell, right or not? So if you agree with this, just type price, okay? Just type wait, price, all right? And having done this, right, just before I trigger, I also have to calculate lah. So unless you probably are like Elon Musk, that, you know, now you're the richest guy on earth, you don't have to care about how much you spend, right? But most average people like us, we need to calculate, because for me, right, I have a trading sum, I have a fund, my own trading amount, and then I cannot be risking every single cent onto a position. I cannot even be, you know, like over leveraging, because if it blows up, right, it is going to be very painful. And there goes my livelihood, you know, my livelihood depends on this. So the next step, right, would be prudent risk management. That means literally you calculate. You literally calculate how much you're going to risk in each position, and that is the maximum tolerable risk. And thereafter, right, when you have the 5 steps in place, what have we just done here? That means I want you to envision this. I know you all will be thinking about, let's say, diamonds, right? Do you all know how diamonds are formed? Well, they are actually carbon and compressed carbon, and then after that, through different types of I'm not going to go in details lah, okay? But here is just black carbon, okay? And what you do here is to value add the process so that at the end of the day, right, you reach or you land yourself a diamond, okay? It's all black, nothing sexy, nothing nice, right at the start where it's very raw. But at the end here, the diamond is something that is desirable. So this is what we are doing, or what we are trying to achieve with the TS2 framework. Okay, guys, are we all clear? Yes? So once we have that, right, just execute the trade, and then we repeat 1 to 5. Just repeat the steps 1, 2, 3, 4, 5 again and again and again. Okay? So what we do in this TS2 framework, right, it is not to, get ourselves into a risk-free position. No, there is nothing called risk-free in trading. You want risk-free, keep the money in your bank, keep the money in a fixed deposit. That is risk-free, relatively lah. Okay, provided bank is still there. You keep it under your pillow. There's also risk of, rats, silverfish, rodents biting away your money. So we are not achieving something that is not practical. We are not looking at no risk. We are looking at low risk or reduced risk. Okay, this is what we are aiming to achieve using this TS2 framework. So guys, are we clear? If you are clear, can you just type a big C for me so that at least I know, okay, we are clear. Okay, so now let's go on, right, to the detail. What is step 1, 2, 3, 4, 5 exactly? Okay. Now, the first thing, right, like I mentioned just now, it is to really look at star players lah. To really look at, whoa, out of that, 6,800 stocks, right? Because out of, let's say, the US market, we have about 6,800 plus stocks. And how do we look at the cream of the crop? Just like using NBA as an example. How many of you are basketball fans? You all watch NBA? Yeah. I'm a basketball fan, but I play badminton. Okay, nothing to do with this though. But what we do, right, is we want to find the star players, because the NBA, you have hundreds of players, right? So, and most of the people, you will not be knowing their names lah. Like if you talk about Michael Jordan, you will know who is he. You talk about LeBron James, yes, you will know who is he. But apart from all these big names, right, what about the rest of the supporting players and the rest of the still good players but not so good players? So what we do, right, is we need to filter down. Okay, we need to filter down. Okay, so many players, which ones based on their statistics, okay, that are performing. We want to find all these star players. So once we find all these star players, we add them to our watch list. Okay, we add them to our watch list. So one of the best way, right, to find these star players is to use this concept called relative strength. Okay, guys, can you do me a favor to ensure that you remember this? Can you just type relative strength, or maybe in short, right, RS? Type it in the chat. So this is a chart that I captured last night, and you can see that this date over here is 25th March 2020 to last night. So what is the significance of 25th March? In fact, maybe I can go one day back, 24th, because 24th March 2020, it is the bottom. It is the bottom of the COVID crash. So if I were to refresh your memory a little bit, what happened last year was during Chinese New Year, we were so happy. We were like, yay, what happy, cheers, make a lot of money this year. Then after that, what happened? Circuit breaker. Everything come down. So what happened last year, right, it was a minus 35% drop across major markets in about 19 days. This is a very, very sharp, very quick, very painful drop that a lot of wealth have been transferred from the inpatient to the patient, from the from people without knowledge to people who are equipped with the right knowledge. So looking at this, right from the bottom, I always like to say, okay, now this is right at the bottom already. From here, we go, okay? Here is the starting point, we go. Which are the ones that are leading? Okay, which are the ones that are leading? Now, it's very, very clear, right? That if we compare from 25th March, the market, okay, which is signified by here, the S&P 500, the ETF, SPY, it only went up by about 55%. It only went up by 55%. So therefore, right, I draw this line across, okay? I draw this pink color line across to show me, okay, here is where the market is. So which are the ones that are lagging? Which are the ones that are leading the market? And this is what I am looking at, using this. So if you are thinking, hey, Jay, where do we get this chart? Don't worry, later we go into the live example. I will show you where to get this, okay? So it's important to get the concept here. So guys, based on this, right, which are the sectors that are outperforming the general market? Can you type it in the chat? Let me know. So over here, we can see discretionary. This is outperforming. Materials, this is outperforming. Technology is outperforming. Communication services is outperforming. Industrials is okay lah. So I put a dotted line lah. Okay, and then the rest, financials about there, energy, not really. Utilities, huge laggard. Real estate, no. Staples, no. So what did this approach tells us? What is this approach telling us? So it tells us simply, if your money is in staples, companies like staples, what do you have in staples? Like P&G, maybe Colgate-Palmolive, and all these companies, okay? If your company is in this, in utilities, in real estate for the US, then it is no wonder that your portfolio may not be as, performing as nicely as others, right? So this approach, right, from a snapshot just tells us, okay, I want to find those strong sectors. Where do I find them? From here lah. I want to find those that are outperforming. So from discretionary, what do we have? Offhand, I can be thinking of stocks like Amazon. I can be thinking of stocks like Nike, Under Armour. Then you also have Walmart, Costco. You also have Target Corp. All this field, they are in discretionary, consumer discretionary. Under materials, you have, I can't remember, I'm sorry. Industrials, okay, industrials, because I'm still in position for one of them. Deere & Co, Caterpillar, these are very, very strong stocks that close out the last quarter of last year for me. Okay, these are the very, very strong stocks that I'm in. Technology, of course, everyone will be looking at technology lah. Zoom, you have everything lah. Everything is zooming lah together with Zoom lah. So technology, you have Salesforce, PayPal, Visa, MasterCard, they are all here. Okay, they are all here and they are very strong. Communication services, Netflix, Disney. Then you also have your Facebook, Google, etc. They are all here. So this is an overview to let us know, okay lah, out of the 6,800 plus stocks, right? I don't look at all 6,800 lah. I look at these few sectors first. Then from there, I zoom in lah. Okay, guys, are we clear? Yes? If you are clear, can you just type a TD? Okay, just help me type a TD, call a top down. So this is like a bird's eye view. We start on top and then we look down. All right, TD, top down. So once we have used a top down approach to get the strong sectors, and then we drill down to the strong counters within the sector itself. Okay, so this is where I find my stocks, and this is the reason why, while the whole world is on Tesla, on NIO, on all these companies, I am on Deere & Co. I'm on Caterpillar. Just put on a chart. If you're on your computer, just put on a chart on DE. That's the ticker symbol, DE or CAT. Look at how they perform in the last quarter. These are very strong stocks that are not on the news, but silently climbing lah. So yeah, so these are the stocks that I like because they are not so sentiment driven. Sentiment driven stocks inflates fast, deflates fast as well. not so, all the not so sentiment driven stocks, right? They slowly climb slow and steady So this is something that I like because like Alex mentioned initially, right, I built my trading philosophy on consistency okay. So this is something that I use for myself, and I strongly encourage you to check it out. Okay. So having done the first step, right, which is to find okay. So now we know how to find all the strong sectors, the strong stocks. Now the next step, right, is really to qualify them. To ask yourself at least, very simply, is it up or down? Is it volatile or is it quiet? Then should I be putting my money in it or not? Okay. So let me just put it into a picture. They say a picture paints 1,000 words, right? Can you tell me what's wrong with this picture? Does this picture look funny to you? A bit funny, right? Because when we're looking at the vehicle there, that's a F1 vehicle, a Formula One racing car. What is it doing in the off-road? What is it doing, on off-road like this? Because you will be expecting maybe a rally car in this kind of terrain. So it doesn't matter. The point here is, it doesn't matter what kind of stocks that you have. Because if let's say Tesla, maybe not Tesla. Let me use another example. Maybe let's say Disney. Disney is a fundamentally good company. And if you catch it at the wrong price, or you got in while the trend is not in your favor, are you going to make money or lose money? Chances are you're not going to make money, right? So the terrain, it's very important. That means now I have a stock. I also need to know about, okay, when I look at the chart itself, is it up? Is it down? When I look at the market itself, is it going up? Is it in a bullish mode? Is it rallying, or is it sideways? Because 85 to 90% of the stocks will move together with the market. And this is why, right, we need to qualify the terrain first, okay? And one of the ways for us to qualify is to look at the market behavior. Okay, to look at the market behavior. So over here, when it is trending, okay, then obviously now here is downtrend, obviously here is uptrend. Then when it's ranging, what do you do? So when you qualify, you break down the market like this, right? You will not be, wow, everything I close eye, buy, just buy. Maybe in the last 2-3 months, it will work nicely for you, but it will not, it is not like this one for the last 10 years. It has never been like this. So only last year was good. Okay, last year was very good. So when it's downtrend, you know that, okay, if I have a strong stock, now downtrend, what do? Don't buy first. Because if you buy and it goes down, the fact is you have a good company, but you're still losing money. You get what I'm saying? Yeah. So we want to buy, right, when the trend is in our favor. So we have to know the behavior of the price, and also the volatility, okay, the phases. Like here, if you are talking about broad market, the broad market phases, is it, rallying? Is it still climbing, or is it just going sideways? Because if the market stalls, then chances are 85 to 90% of your stock will stall as well. Okay. So another thing to consider is the volatility. Is it high or is it low? So what I mean is here, let me draw it out. If volatility is high and uptrending, right, you get stocks that are, like this, still climbing, but very volatile. Which this means that if you want to set your stops, right, if you want to put your stop loss, if you put the stops at a very obvious level, there's a high chance that it will hit. Okay, there's a high chance that it will stop you out and then you move in a direction. Frustrating, isn't it? So if the volatility is low, these are the kind of stocks that I like it. Okay, they just climb. Just very nice structure from a technical point of view. So I prefer to be looking for this kind of stocks rather than this kind of stocks. Okay, so low volatility, and of course with the right trend. Okay, we've drunk from the Red Bull. So the time frame, right, that we are looking at here, the time frame actually doesn't really matter. But most of the time, I will be looking at daily time frame. Okay, most of the time, I'll be looking at daily time frame. But time frame actually doesn't really matter. Why? At the end of the day, right, it's about the acceptance or the rejection of price. Because when you are buying something, all I'm looking at is the price. If today people tell me property, I can find a good size condominium for less than $1 million, okay, in a good area, will I buy or not? No lah. First thing I will check whether is it haunted lah. But if everything okay, right, I will buy lah. Why? Because the price is good. What I'm paying for is the price. At the end of the day, what determines whether you make money or you lose money is the price. Okay, it is the entry price and then your exit price. So price is number one in my opinion. So before we talk about that, right, here is the terrain. We need to qualify to know that, okay lah, we don't impose our views. We don't impose that, hey, I put my money, you better go. It doesn't work this way. So it doesn't work this way because our money is insignificant. It's too little. Unless you have billions of dollars, then it's different. Then it's a different case. So qualify the terrain. This means that you are with the trend. Okay, you are in the right direction with the trend. Then now, finding done, qualify. In a nutshell, you understand what it is. Third thing is really just to choose law. It's really just to choose. Okay. Now pass, right? Pass. Okay, pass already. Now go test the third step. Can pass or not? Let's see. We also have to consider what is like a business, whether this business does it make sense in the long run, because that would tell us whether this business it is a good business or not. It tells us our time frame. Because some of us are investors, and if you want to invest into a lousy business, then in the long time frame, the prices are likely going sideways unless you have got huge expectations, euphoria. For example, one of the companies, Limited Brands, the ticker symbol is LB. So last year during the COVID crash, it tanked quite a fair bit. I picked it up. And of course, I asked a few friends. Some of them, they say, hey, this business not doing well. It's no good. Fundamentally, it's not doing well. So I got in below $20, and today is about 40-ish already. Okay, it's just less than a year. So the business point of view, right, it gets me to decide, can I stick it in with this company? Should I be here with this company? Is it going to make sense? But then that would be for me to be very, very precise to say, okay, this stock is purely just for trading only. Few days, and then hit target, I'm out. Or is this kind of company I want to accumulate along the way? I go in tranches. I go in okay, I scale in 30%, slowly build up to the size that I want. Or I one shot just whack, hit and run. So it really, really just depends on the nature of the company. So the fundamentals, right? Due to the time constraint, I cannot be covering every single one of the fundamentals. However, here is a very, very key perspective. Okay. So here is a very, very key perspective. Company versus industry. Guys, can you just type this in the chat? Company versus industry. C versus I. Now, what is company versus industry? For example, we cannot be comparing Boeing to Disney. We cannot be comparing Apple to Microsoft. Even though you may argue that, but they're all technology, but Apple, it's a very different business from Microsoft. Microsoft runs more on the software. Apple runs more on the hardware. Apple is more like an iPhone company. 48% of the revenue comes from iPhone. So if you want to compare against Apple, right, you should be looking at Dell. You should be looking at some other companies. When you're looking at Microsoft, you should be looking at Salesforce. You should be looking at Oracle, etc. Correct? And just like if you are looking at Visa, you look at MasterCard, you look at PayPal, then you look at American Express. So we must compare within the same industry, because this will tell us, okay, relatively, how is this company performing against the industry peers? Like if you were to look at DBS, okay, a bank in Singapore, who will you be comparing it to? You will be then OCBC. These are only two, right? Will you go and compare with Citigroup? It's a very different business model. It's a very different scale. It's not a fair comparison. So always compare the company versus the industry to make sure that it is at least in line, or best, you should have a company that is outperforming. That means if you lose money, it's fine. It means that just the industry is going down, but this company is losing lesser money than the competitor. So is it a good thing? It's a good thing. So this is one of the optional filter that I apply to my trading plan as well, because I don't want to be putting my money into a company that is not really chui one lousy one, then will go or not, I also don't know, you know, that kind. So this is one of the filters that you can add and every filter that you add in will remove a little bit of risk So at the end of the day, you end yourself with a low risk stock for you to trade at the right price. This is the ideal situation. Okay, so besides fundamentals, I also choose fluency. Now, what is fluency? We are talking about the fluency of the charts because, like I mentioned, I am a 70% technical based trader, 30% fundamentals. So based on this 70% technical, because I'm always looking at price. For this price over here, unpredictable as this chart on the left, okay, it's unpredictable. This chart on the right, it is relatively, nicer, more predictable with defined swings. So guys, between the left and the right, which chart do you think is easier to trade? L or R? If you think that it's the right, can you just type a R? If you think it's the left, can you type a L? Just type it in the chat, let me know. So the rest of us can see also, because right now we got close to about 600 people here in this room, right? So when we are looking at unpredictable charts like this, it makes trading very, very tough because you can go nicely, then suddenly, bam, come down, then trigger a stop loss. Then you'll be like, what have you got to do against me? You don't like me, is it? So it's very frustrating. Then you go down, also don't go down. Go up already, don't go much, you come down. So it's very frustrating. So you see, wow, this one climb. Wow, flat pattern. Technically can go up somehow. Then the next thing you know, get down. And you dead. So this kind of chart patterns, it is not the unpredictable visual. Okay, unpredictable visual is very tough to trade. Very, very tough to trade. On the other hand, when most of you are looking at the right side, okay, this is what you have typed. It is so easy in a sense, not say so easy, but relatively easier. You get a impulse leg and then a corrective move, consolidation. Then you get another impulse leg and then again and again and again, even come down is measured. So it is a series of higher low, higher low, higher low, higher low, and then higher high, higher high, higher highs. So this kind of structure, okay, this kind of structure is what we call very clean. And these are the kind that I would want. So this means if I find a very strong stock and then I qualify, yes, it's an uptrend and all that, but I look at the history, I zoom out, I look at the history. Ayo, the chart looks like this one. The one, I walk away. Why? Because I may be one of the sad case inside this chart because it can go up, and then suddenly get down. Then you pluck out all your hair. For what, right? So we choose fluency. This is very important, guys. Very, very important. Visually, when you look at a chart that looks like a left side, walk away. Put your money elsewhere. If you know where else to put in my pocket, okay? Nah, just kidding. Okay, so choose fluency. Now, after you choose this fluency, next step is really like what I mentioned, to wait for the correct timing. Okay, to wait for the right opportunity. Because a lot of us, say, how many of you have got this experience? You buy a counter and then you buy already, and the counter go down. Then you hold, you say, can one, I hold. Then suddenly, cannot lah, beta nah. Then you sell. So you cannot hold anymore. You sell, and then the stock reverses up. How many of you have got this experience? Can you just type me in the chat? So, me, literally, I'm a victim of this many times. I hold, can one, cannot. Then end up cut loss bo pian. Then cut loss already, so irritating thing, cut loss already, the thing fly. Irritating, all the time. Thank you for your honesty, so that at least I know I'm not alone. So after all this heartaches now I learned to be more patient because I don't have infinite amount of money. I have to wait. My money is hard earned, and I need to wait for the right timing to deploy in the most optimal price. And if I missed it, I missed loss. So at any one point in time, I have like many targets in my watch list that I'm looking at. Okay, and for sure, right, in my trading plan, I will have, okay, for this one, what is the price I want to enter? This one, what's the price I want to enter? Every single one during the weekend, I will have my homework done on it already. So I would have the trading plan to know, okay, this counter A, this price, counter B, this price, counter C, this price. So if it doesn't hit, so far I'm not so sway lah, because if I'm looking at 10 to 15 at one time, right, sure got 1 or 2 will hit one. You all 10 also don't hit, then you are looking at the wrong things lah. Okay, so have a high number of candidates, but doesn't mean buy everything. Okay, doesn't mean you buy everything. You buy those at the right price. So you must wait, because even our kids, right? Some of you have got children, right? You know you will not. Even our kids don't listen to us. You tell me, come shower now. No, 5 more minutes. I want to watch TV. I want this. I want that. Correct or not? So even our kids don't listen to us by the to 100%. How can you expect the stock I put my money, you better go. It doesn't work this way. You wait long. Unless your money is billions of dollars. That's different. So in the framework that I use, right? This is how my chart looks like. I swear to you, this is how my chart looks like. I don't use any of the very cheap technical indicators. I do know them because I have to study them when I'm taking the Certified Financial Technician exam, the CFTE exam. So I know how to use them, but I don't use them. For me, I use a framework, okay, to tell me what's the right price, what is the right timing. So in this technical analysis framework, right, I only use 3 things. Number 1, right, support resistance. Number 2, I use trend lines. Some of you that are not hearing me for the first time, you may have watched one of my webinars on trend lines as well. And the third thing I do, it's pivot. And from what I understand, I think Alex from MarketWise Asia, the organizer, he uses a lot of pivot as well. So these are the 3 framework that I use. Okay, so guys, can you just type a big 3 in the chat? So I use this framework, right, to determine where are the turning points. Of course, you plot all these lines, must tell you a story, right? Must tell you something, right? You plot all these lines already, then you ask, so where to buy? I don't know leh. Then you plot the line for what? You waste time. Okay, so when you plot all these lines, it is supposed to tell you the turning points or the pause point lah. Okay, so where the prices may pause a while. So that will determine, okay, at this price, right, if it holds, I am going to get in here. Okay, so for example, using the snapshot on this chart, okay, this is from last year, you can see that when the prices are dropping down, right, where is the next support area? The next support area will be here. Next support area is about 3, 2, 4, 5 thereabouts in that zone. So if it comes here, and then it starts to slow down a little bit, then it will give me more conviction, right, to know that, okay, it may be turning back up like that. But if let's say it doesn't slow down, it straight away just bashes through, bam, and where's the next one? Next one is probably about this zone, this area. So this is pretty much, right, like how we cross the road. When we're approaching a traffic junction, and sometimes we see green man, right, then we just cross, right? But what is the more safer option? We see green man, right, then we still check for traffic. If the car got stopped, not. Even I see green man, the car don't stop. Am I going to say, hey, stop, hello, green man, you stop here? Doesn't work this way, right? If the car want to bang you also, then what? You're going to get yourself in an accident? It doesn't. So even though you have the green man, can, but still not slowing down, can you buy or should you buy? The answer is obvious lah. You shouldn't lah. So green man, wait for the car to stop. Okay lah, clear. Then let's go. So this is what I use to tell me the right price. So I'm just waiting long. So most of the time, right, I have my dozens of counters that I'm looking for in the watch list. Then all I do, right, is just wait lor. So people ask me, right, what, Jay, you got 6 monitor, what do you use? What do you put on the chart? Actually I use 4 One is social media, right? The 5th one is social media, the 6th one is always on Netflix. So why? Because I'm waiting for the right price. Okay, just to tell you in all honesty. So Most of the time, it's really just waiting and waiting and waiting. That's all. Okay, just wait for the right price. So now we find already, we know where the star players are. The star players are on our side, and then the star players that are not performing right now, we put them to one side. Those star players that are performing, okay, steady, come, let's go to the next one. I will wait already. Ready to fire, ready to fire, ready to fire. So when I'm ready to fire, what do I do here? When I'm ready to fire, the next thing is really just calculate. I really just calculate. So calculation, right? It's all about position sizing. Okay, it's all about position sizing. So I didn't, understand this, how the importance of position sizing, because I'm very sure all of you heard of these 3 M's before, mind, money, and then method. And all of us are so focused, right? Where? On methods. Okay, guys, can you just help me type 3 M's? Okay, just help me type 3M on the chart. So do I use the buy stop order? A good question by Dennis. Yes, I do. I just wait for the price that I want. So a buy stop order. That's for the breakout. Then I also have a buy limit order. That's for the pullback. So 3M over here, the mind, money, and method. The method is actually the least important. And now you'll be thinking, don't make sense, how come method the least important? So it is just like our professional qualification, our academic qualification. You have a degree, that doesn't mean you can perform in your job. And for example, a person with a lesser academic qualification does not mean that they cannot do a degree holder's job. Okay, on the job training still can be done, correct? So method, when it comes to trading, is pretty much all method will work in the different time frame, different market right? All methods will work. So methods are like a prerequisite. Without method, you cannot trade. But with the method, that doesn't mean you can do well. Guys, you agree? If you agree, can you just type agree? Okay. So over here, right, mind, which is our fear, ego, and our greed, our EFG, ego, fear, greed. These are the 3 good friends in our mind that's always playing tricks on us. Should I be buying more? No, I'm right. I refuse to cut loss. That's ego. And come down a little bit, or we go up. Wow, so scared. Yeah, that's fear. All right. Then that aside, that can be mitigated. That can be so-called managed using a proper trading plan. And what we look at here, right, is the second most important pillar, which is money. Okay, money. It is the second most important pillar. Why? Through experience in 2013, I doubled the stop loss for one of my position. Okay, I doubled the stop loss. I doubled the sizing. So end up I lost 4 times the intended loss amount, which that was about 35% of my account back then. That was 2013 October. Over Google earnings. Okay. You can look for October Google's earnings spectacular one. It just gapped up by $100 over. So I lost quite a fair bit, 35% of my account in 2013, and that was very, very painful. So that was one lesson, right, that really etched on my mind and tell me and really teach me through the hard way. Just risk how much you can afford to lose. So I know a lot of people say, wow, position sizing, we go by percentage of account, correct? So if you have heard of this, you are not new to this, you definitely have been trading for a while. And for me, right, I don't really like percentage of account. Why? Because percentage is something very foreign. Like, you lose 1%. Oh, well, so what's 1%? If your account is 1,000, you lose 1%. $10 only. It's okay, what? $10. But if let's say that the guy is $1 million account, you lose 1%. That's 10,000. What piang? It's a very different feel when it comes to $10 versus 10,000. So percentage of account is the way for us to calculate. But at the end of the day, right, I'm always looking at the money, the monetary value. Okay, so guys, type this down: $ value, monetary value. So I'm always looking at this, and I'm asking myself, can I? How would I feel if I lose this money? If let's say I lose 600, would it be like, just a pinch, or is it, wow, painful if my account is 5,000, then I lose 600, wow, painful that's 10+%. So I always look backwards and count backwards in terms of money value. So you just take the stop loss budget, okay, divided by your dollar risk per unit, which this comes from your trading plan. Okay, this always comes from your trading plan. It should be based on your charts, should be based on your system or your methods whatsoever. If you want to lose lesser, I know some of you are thinking, hey, if I half my dollar risk per unit, right? Instead of lose this much, I lose like that lah. Then I will lose half ma. But the chances of you getting the stop loss is higher lah. Okay, so everything is fair. So if you want to control your losses, I know nobody likes to talk about losses lah. Everyone likes to talk about, wow, how much I win, you know. But let's face the fact, losses are part of this business. If you don't like losses, then don't be in this business lah. You are in the wrong business. Okay, even a casino must lose to make money. Correct or not? So to control the loss, right? The only thing for you to control it is through your sizing. If you want to lose lesser, trade smaller. It is not to halve your sizing. Okay, you want to lose lesser, trade smaller. Okay, lose small. That means you trade small. Okay, so guys, can you just type this in the chat to make sure you get this important message? Because I commit this mistake. I've lost my hard-earned money. If you can learn from this, you don't have to lose your hard-earned money. Okay, fair enough. Trade small. Just type a trade small in the chat for me. Okay, great. Now, once you have these 5 steps, right, then I think the framework is complete. You find, you qualify, you choose the correct stocks, and then you wait for the right timing. You calculate, okay? You calculate how much you're going to raise, and then the next thing is really just to rinse and repeat. Just execute your trade and stick to your plan. Now, if your plan, right, don't even have the reason, if you don't even have your target entry price, your target exit price, then that is not even a plan. In fact, if you have a reason to trade, if you have the entry price, the exit price, and then you have your size, these are the bare minimum you should have inside your plan. If you don't even have these, right, then because in what I do, I got some people, they come and ask me, hey, Jay, I got this position, how what should I do? And I always ask them, the first thing is, what's your plan? And I don't know, at that time I see this here, the price come down a little bit, I think it's cheap, so I buy lor. So this is literally, I swear this is a true story. So it's like, then you buy, then where you want to exit? I don't know. That's why I'm asking you now lor. But it's your money. It's not my money. My money, my plan. Your money, your plan. Right? Fair or not? Guys, is this fair? So if you think that having a plan is important, if you agree with this, can you just type plan? Okay, just type plan in the chat. Okay, stick to this plan. And if you do not have a plan at all, don't enter lah, don't trade lah, okay or not? Okay, so this is a recap for the 5 steps. Okay, this is a recap for 5 steps. Now, we still have some time. Very quickly, right? Just let me go through a case study. All right, a very quick case study. So keep your questions coming. Very good. Okay, keep your questions coming. So guys, am I providing value? Yes or no? If you think that I'm providing you value, right, can you just type value in the chat, please? Okay. So looking at the chart right here, you all can see my chart, right? So this is I'm using TradingView lah. So let's say on the S&P 500, right? Okay. Over here, this is stockcharts.com. Maybe let me just paste this into the chat itself. You can see I already pasted this link over there in the chat. So this is 24th March all the way to 8th January. So this is until yesterday. You can shift left, shift right lah, up to you lah, but more or less around there lah. So I always start from here, and then I'll look at the step number 1 fine lah. So I know here is where, okay, here is where the line is. I'll be looking at discretionary, I'll be looking at industrial materials, technology, so on and so forth. So which is the strongest performer across the whole market in the last, since the bottom of the COVID, from the 24th March lah. So it is evidently materials, right? I know everyone is just thinking, wow, Tesla, Neo, Zoom, everyone's just thinking of all these. For me, I look at some other things, okay? So industrials is one of the companies that I'm looking at. One of the sectors I'm looking at, materials. So how do I find the companies itself? So I will go on over to sectorspdr.com. Again, I'm posting the link over in the chat. So Alex will help me to repost that in case you missed it. So I'm using this link as well. You can see that the market is made up of 11 sectors. So over here, some sectors are huge, some sectors are small. So over here, you can see real estate is 2% is small, then energy is small. But you look at technology, 27%. Okay, just last year, before December 31st, right? I think before they rebalanced this thing, technology was about 28+%. So XLC 10.54%, that's about there. So combined together, your technology companies together with Google, with Facebook and all this, right? They represent for about 30%, 40% of the whole market already. Okay. So what else? You look at industrial, the weightage got reduced a little bit, used to be about 10%. And consumer discretionary was from 9%, it got bumped up to 12%. So this is the reshuffling, okay? And if you track this as frequent as I do, I already have a habit of tracking this every single week. You will know the change in the percentage. So how do I find? You just go up, and then let's say I go and look at industrials. So I click on industrials, okay? So once you click on industrial, it will bring you to the fact sheet of this fund. And all I do is just to look at a portfolio. And over here, you can see holdings and weightings. You have the top 10. So over here, right, it is very, very clear for you to see the top 10, who you have. You have Honeywell, you have Caterpillar, you have DE, you have General Electric. Hey, these are all the companies that myself and my swim trading community, we are trading on. Okay, so are these stocks on news? Are these stocks on news? No lah, they're not on news. What is on news? Tesla, Bitcoin, Donald Trump, those are on news. But for me, I like to look at orders that are silently climbing in the background, not on news, but very strong performance. Because if you were to look at Deere & Co, okay, DE, look at how it goes. It's climbing since the bottom, just nice structure. Okay, remember steps 1, 2, 3, 4, 5. So step number two, you can see nice structure, higher low, higher high, higher low, higher high, keep climbing and climbing and climbing and climbing. I don't know what happened in the last 2 days, okay? So I'm not complaining. It's a very good run. It suddenly just gap out. I'm like, oh, okay, that's good. So my buying price for this is fantastic. Now, yeah, so this is true companies that we are trading on. So just to let you know, you can see this is my swim trading trade discussion. So guys, if you I know I cannot answer every of your question here, right? If you want to answer, you want to engage me in the discussion, right? Head on over to my trade discussion group. That's where we have got members posting the questions. Like for example, you see Engshin, one of our members using the TPB trade for DE. And yeah, and we are not complaining because this thing really just run out like that. Caterpillar is the same thing. So how we find all these stocks, and you can see every of the chart that I put on, right? I pretty much show you what this is my charting. I don't have any more things there, man. Okay, my chart is relatively clean. Okay, so this is how I find all these counters. Okay, so guys, clear? Yes. So if you are clear, can you just type a TD? Again, this is called a top-down approach. What I'm sharing with you here is a top-down approach. Go and look at the sectors, then come down to the individual fund, and then look at the top 10, top 20. That's how you find all these stocks. Okay, that's how you find all the stocks over here. And this is how you can get to those stocks that are strong, not so market sentiment driven, and it's a workhorse, silent performer like that. Then yeah, climb on. Okay. So this is what we look at. And then let's say Caterpillar, right? Before I talk about that, I know some of you, what stock to buy? What stock to buy? Today I won't be answering that question, but looking at the market over here, is this strong? It is very strong. So remember the 4 steps? The 5 steps. Remember this? So find, I'll show you where to find already. Qualify, okay? Uptrend, downtrend. So that one we visually go and inspect. Choose fundamentally good companies. One of the sites you can use is FinVis. You can also use MSN Money. So these are the sites you can use. They're all free, by the way. Then price action. Here is what I want to share with you about price action. What am I waiting for? Waiting for the turning points. Okay, waiting for the turning points. Oops, sorry. So now, For ES, right? So this is S&P 500. The movement more or less is same as the spot future, the spot index itself. You can see the trend is definitely up. So what are the key levels that I'm looking at? The next level I'm looking at here, right? That is around somewhere around here, 3880. So if I were to put on a pivot as well, probably around this range lah. So everything is in a zone lah. I'm expecting this zone to be the next resistance. But of course, this is, oh, okay, I'm aiming there. But go there already, then I see the reaction. Don't take premature action, okay? Wait for the reaction. So that's the area I'm looking at. And where is the most immediate support as of last night? Okay, as of last night, as of Friday, we are looking at the R1 area, which coincides with my own support level. So this zone, if Monday opens, this zone can hold. Then I'm expecting it to go up lah. Okay, if it cannot hold, then if it comes down, where is it gonna come down? The previous area lor. So where's the previous area? This area lah. Okay, so this is what I use or how I read the turning points, how I determine the turning points using the tools at my disposal lah. So remember, just now we talked about the framework, right? The 3 tools: support, resistance, trend line, and pivot points. Okay, so this is the S&P 500, the turning points I'm looking at. So I start here, then after that I will go to my stocks. So my stocks, like for example, please don't ask me Tesla can buy or not. I this kind of stock I also don't know how to buy. If you are in, you are in. You are not in, then may the force be with you. Okay, so that's all I can say. Okay, so guys, are we clear? Are we clear? So how do I trace my trading lines along the dotted ones? Very good question. That is one of the sharing that I've done regarding trend line. I'll be sharing this in the future as well, so stay tuned. Then let me look at some of the question. Facebook page. Okay, rather this Facebook group. So swim trading trade discussion. So you just go over there / you sorry guys, you just Google, you just go on to your Facebook and then you just search for this lah. Okay, so if Alex can find the link he helped me put there. So I think it's facebook.com/group/swim trading. Okay, then yeah, it will be here. So this is how I use lah. Okay, so using this approach, right, hopefully I have helped you attain some clarity. So rather than just wow, Tesla, NIO, Bitcoin, at least now you know, there's a whole world besides Tesla and Bitcoin. Because if you look at Disney also going, just get this one is get up and then move up, get up, move up. So it's so strong, you know. These are all the very, very strong, crazy strong stocks that they are not on the news, and we love them. Okay, I love them. So if you find, right, what I have shared with you in the last hour, right, gives you some clarity, I would really, really appreciate it if you can just help me type clarity in the chat, please. Just help me type clarity. So at least I know, okay, I've really given you value. I have given you an approach using the TS2 framework that you can use to help to, sharpen your own trading edge lah. Okay, Ken? Okay, so now let me just, we have some time for the questions. Just let me take a look. Will be already price to perfection. Let's say like Tesla, this is so sky high, that kind. I won't lah. I need to see a proper structure, come back and retest the previous breakout areas. These are the kind of stocks that I'm looking at. Like Tesla, just one shot like that. I also don't know how to enter. Honestly, you ask me, I don't know. Unless I just close 2 eyes and then I pray, just throw. But that should not be the way, right? That is not trading, okay? So, yeah, top-down approach, good. So not
we are near the 415 mark. So let's say you want to continue or
yeah. Okay, great. So guys, thank you, Alex, for the reminder. So if you have any, you want to continue discussion, right, just be sure to join my the swim trading trade discussion group. Later we can continue. I know I cannot answer each and every of your questions due to the time constraint. I'm so sorry about that. So now, if you have clarity, right, from the sharing that I've just done, I really, really appreciate it. And right now, please also give me about 10 minutes more of your time, please, to share with you this offer that I have in conjunction together with marketwise Asia. So just very special for this summit itself. That's where, right, I have my TPB Swing Masterclass that really teaches you all the things that I mentioned, the top-down approach, the 5 steps into a very systematic